Welcome, folks. We are live. Welcome to Thursday Night Stock Charts Live. This is where we review the topics that I think are relevant to the market, and we're going to talk about the rally today in particular. We're going to talk about how we appear to be closing out the week using weekly charts. So we have a lot to go over, as we always do, and this is our preparation. Thursday night is our preparation for next week. That's where our head's at. It's not so much how are we going to close out this week. It's more so what are we going to do? How are we going to position for next week? Now, I'm going to say this out right out of the gate. I put on more short positions yesterday and today. Do I regret putting on the short positions yesterday? Well, hindsight, yeah, I do. But we're going to talk about why I think, and this doesn't mean I won't stop out of the short side, because if you're early, you're wrong. But I'm going to share with you my thoughts about why we rallied today the way we did and why this market has it wrong longer term. Now, I've been saying that I believed in the short term the stock market was going to rally, and it has. But longer term, there is a storm of brewing, and I'm not saying it. It's the yield curve that's saying it. And we're going to talk about the comparison between now and 2007, 2008 to the roll up of the breakdown of the equity markets. So let's get to it. A lot to go over. So today we broke out on the trip Qs. Now, yesterday when I added shorts, you should be asking me, well, why did you add to shorts? Didn't you project, great contrarian trader, that today was going to happen? No, I use a rules-based approach. All right, so we waited for a break in the Qs. I had thought that they were going to break out a few days ago. They stalled out, and then yesterday they broke down. That's the proximate reason as to why we added to shorts. But it wasn't an aggressive short, so any loss is going to be small. Maybe right now on the trade I put on yesterday, about $500. The reason is that we used what you call a put spread, meaning I bought a deep in the money put option, but as an insurance policy, I also bought a deep out of the money insurance policy. That way, if I'm wrong, I get paid on the put position. So I lose money on the deep in the money put, but I make money on the short put, the long put. So that helped us today. If I didn't do that strategy, I would have been really kicking myself today. But we did that, and that helped save the day a little bit. Now, today was really a funky day. I mean, you rarely get days like you got today. What do I mean? Well, like I said, yesterday we broke down, and we did so on fairly good volume. What happened today? You had the PPI plunge prompt panic bid in big tech, bullion, and Bitcoin. So it was a fairly anemic. It was a fairly anemic report, and that allowed for equities to break out. There's a problem with this, and we're going to go to it in a moment. Now, the first thing I asked myself was how is volume? And volume was not good. We need a follow-through day. We're probably going to retest 317.50 tomorrow. Within the next couple of days, we are going to need a follow-through on rising volume to validate this breakout. Now, tomorrow we have big banks coming out, and that could be a catalyst to send stocks lower if they're bad enough. But I don't think they're going to be bad enough. The volatility in the big banks is very negligible. I didn't put on any bank trades today in front of earnings because I wasn't going to get paid. But it's also a signal, and I believe, of apathy. There's a lot of apathy in this market. We're going to go to a chart of the VIX as well in a moment to show that. Now, why else What was the second question I asked myself? Well, was this rally broad-based? So I took a look at the New York Stock Exchange advanced decline line, and you could see that you had more advancers than decliners. So it was fairly broad-based. So it wasn't just Apple shooting up higher, everything else lagging, and Apple drove the market. It was a broad-based rally, so I can't dismiss the rally. The only thing I think is disappointing is volume, but we may get a follow-through day in the next couple of days. So the PPI was the proximate cause. That's inflation at the producer level. So why else is the equity market rallying? Well, take a look at high yield debt. High yield debt on the month is up again. So over here, you can see I have correlation high yield debt versus the 10-year yield. And you can see that they're pretty much, they trade inversely of one another. So the high yield debt market right now is saying, okay, I understand this. The Fed's going to need to cut rates. We're going to price in, we're going to buy high yield debt in anticipation of the Federal Reserve cutting rates. Okay. Okay. So the Federal Reserve is going to cut rates. We're going to come back to this. The VIX hammered, and I really should have saved this for later on, but absolutely hammered on the week. And yesterday was kind of a signal in that while equities were down yesterday, so was the VIX. So that was kind of a tell. I ignored it. Now, we'll come back to these in a moment. Why else do we think that the markets are not getting this right? They're not getting this right longer term. All you need to do, folks, and first we're going to take a look at the S&P 500 on a monthly chart. This looks beautiful. This looks beautiful. This looks like it wants to go higher to me. No doubt about it. I'm saying that, and I have shorts on right now. I have longs, and they're doing very, very well. But we have short positions on, and I'm probably not going to stay short here. I'm probably going to have to get stopped out. I want to see how earnings play out. So, and I'm going to come back to this chart in a moment because I'm going to draw a parallel to the financial crisis. So what aren't the equity markets getting that you get because you come here, you watch this show, and I talk about this every single week until I'm blue in the face because I don't want anybody to be surprised when things get real fast. So the yield curve, which as of last night was actually down on the month. It was up earlier in the month. As of yesterday, it was down. Today, actually, sorry, day before yesterday, it was down. Yesterday up, today up. So equities rallied today into a steepening yield curve. And I've always said, don't worry about the inverted yield curve. Worry about the steepening yield curve because that's when historically things get very dangerous for equity markets. But you really don't need to worry about it all that much until we get up and into this range here. But that can happen within a month or two, easily. So we have a clear breakout on the yield curve. Nobody's watching this. Nobody cares, except for us. And then you have this. Remember, the reason why the markets are rallying is because of PPI. What does that mean? In the mind of traders is that the Federal Reserve doesn't need to raise rates, except for the CPI report yesterday, which was not great. Also, high yield debt markets telling you interest rates are going lower, not higher. Maybe they're right. But that's not what the Federal Reserve's balance sheet is telling you. I'll come back to this. Fed balance sheet eases for third straight week. Bank bailout facility usage eases. And here's the Federal Reserve's balance sheet continuing to decline. that is not an indication that the Federal Reserve is going to cut rates anytime soon. What else are the markets not paying attention to? It's pretty simple. We have the high yield debt market rallying. We have equities rallying, all in anticipation of rate cuts. The problem is that on the week so far, yields are broken out. Remember last week, we broke down and closed down below support on the 10-year yield. This week, we gapped back up. Also, if the markets are pricing in a Federal Reserve that need not be aggressive in raising interest rates, well, they're not paying attention to the commodity market, because the commodity market is clearly telling you that inflation is going to ramp back up. And in fact, I would argue that even though PPI came in less worse, CPI pretty much as expected, the one thing that changed on the CPI, or I shouldn't say on the CPI, in terms of economic data yesterday, was that wage growth plummeted. So in relative terms, even though CPI came in pretty much as expected, for those people making less now, inflation moved up higher. So they're feeling the pinch. And when you see this, you see the bond yields rising. You got to ask yourself, why? Why is gold rallying? Why is silver rallying? Why are the gold mining stocks, which we are very long of, rallying like there's no tomorrow? Simple, because they get it. They get it. Here's a chart of the Bloomberg Commodity Index. And this is a weekly chart. And folks, we're not getting ready to break out. We have broken out. We broke out last week. This week, a continuation move up higher. This is a basket of commodities. So you could see that the CPI and the PPI, those inflation numbers, they've come in a little bit. But that's only because this basket of commodities has come in. Now they're beginning to move up. And then when you take a look at oil as a standalone commodity, oil on the week so far is up over 1.75% on the week alone. And on the month, up over 8.5% in a single month. Think about it. So this move up higher in oil, this move up higher in commodities, that's not factored into yesterday's CPI report and today's PPI report. We start seeing the impact of these rising prices next month when this report for this month is released. April's report will be released in May. So in the short term, let not your heart be troubled. Equities are probably going to continue up higher. But there's a problem out there. It's inflation, and it's coming back. Let's go to some comments. Sean, hello. Sam. RB. Yeah, AMD had a rough day today. Any news? Anybody know why AMD took it on the chin? I didn't have time to do the research on AMD. BBIO. Jody, I know you're going to ask for Boyle. I know you are. I see Jody. I already see her on a little side over here. Welcome, Jody. You know, I want to make an observation because you want to reinforce positive behaviors. Now, there was the time when young Jody would be somewhat tardy to the show, and here she is here. Let's bring her up. She would be tardy to the show, and every once in a while she would miss the show and leave me a nice note on YouTube afterwards saying that she apologized and she missed the show. I got to tell you, I'm getting very, very used to Jody being very, very timely of late. So thank you, Jody, and great to have you here. All right, back to RB, AMD, BBIO. Franklin, welcome, brother. Pedro, we're gonna go back to the 30-minute chart club. I had a problem with the site and it's ate up my Saturdays. There's Jody again. I put yesterday on the Qs. What'd you do on the Qs, Jody? You bought puts yesterday on the Qs? Hi Bob. Too easy, just hold. Yeah. Agreed. We put on a ratio strangle on gold, favoring the put side. We sold more puts, sold some upside calls as well, but we sold twice as many puts because if I have the shares of GLD put to me, I really don't care. I'll take them because it's at a cheaper price. Pete, Mr. Pete, welcome. Tim, good evening. Trader Isaac, the heat is on the markets and at the shore. Yes, sir. TZ Burton, welcome, sir. Goldman, 2,100 an ounce. That's going to be easy. That will move GDXU 15% higher. Then I will SQQQ. What are the two? How are those related? GDXU and SQQQ. Give me your feedback on that. I'm curious. Franklin, JO. Yes, sir. Okay, Pedro. All right. I bought. Oh, and before I go any further, the 30-minute chart club. There's a link below if you want to be a part of it. Private live stream. If you're wondering what I'm referring to, I should have said this. I'm a horrible host. 30-minute chart club. We go over usually on Saturdays top 30 charts that we like to see whether or not we have any setups going into the new trading week. We keep it private due to the fact that we want to keep the focus on the charts. We try to limit it to about a half hour, and then we upvote the top 4 charts that we're looking for, and we track them on TrendSpider. So if you're interested, link below for the 30-minute chart club. And plus, we get spammed here sometimes. There's no spam on a private live stream. Sell GDXU. Oh, I see what you're saying. Okay. All right. Okay. So, yes, I put an alert on my personal calendar. Okay. All right. So, you don't beat yourself up. We all do. This is trading, right? So, I come on here and, most people on YouTube do not come on and start out the show with, I'm bullish on the market, yet I'm short. I have short positions on, and I'm probably going to lose money. It's because we prepared for it. I know we put an insurance policy on. You know that there's a possibility of you being wrong. You shorted on a great day. You shorted on a technical breakdown on volume. There was zero problem with that short. The however is that the market didn't agree. All right. And that's just the game. Now, tomorrow, after the bank's report, you could be in the right. There's zero. I shouldn't say zero. Given the lack of volatility, let me try to rephrase this. Given the lack of volatility, there's a lot of apathy out there. Whether it be, take a look at this. We'll come back to this chart. Here's JP Morgan Chase. I looked at it. I was curious to see what the volatility was after the banking matters that we've had here over the past several weeks. Surely they'd be pumping volatility into JP Morgan, BlackRock, Wells Fargo in advance of earnings, wouldn't they? No. Cheap as dirt. Implied volatility on JP Morgan is less now than it was 2 weeks ago. You take a look at BlackRock, which I normally trade on earnings. BlackRock, IV rank of 9%. I don't get paid on those trades. So there's too much risk, not enough reward. So there's an apathy out there. So when I see that type of apathy and I see the VIX trading down at, what do I do with the VIX? Here. Down at these levels, There's a saying, when the VIX is low, you got to go. When the VIX is high, you got to buy. So right now, we are at close to 52-week lows on the VIX. But every time we get down and into this range, guess what happens? Reversal. And then what happens? Equities, I don't have the S&P overlaid here. Equities move inversely. So, yeah, great breakout here. But I would not be shocked if bank earnings come out poor tomorrow to see this absolutely give way. Not at all. But the reality is it's probably not going to happen. The probability is that we're going to go up, and keep your losses small. Simple as that. Get long, make your money back. And don't listen to these people that say trade around a position. Don't trade around a loss. Don't trade around a loss. No boil request? Okay. Okay. I'm already holding a heavy. Okay. All right. Young Mac. Hey, brother. Hey, all. I've been listening, but I've been busy lately. Well, great to have you, pal. Oh, I'm sorry. And I went into that rant for no reason. Now I understand. I'm an idiot. Okay. Okay. What do you think about selling the 120, 135 strangle on JP Morgan? We can map that out. Puts or calls? Let me know. We'll map it out. We'll do the strategy. And give me the expiration date that you're looking for, okay? Yoga Mac, no, we're actually going to go back to SPY in a moment. So, no, you're not late. We're going to go over that again in a moment. And we're going to go over the weekly chart in a moment when we go over the other chart. So, I'm not done with SPY yet. Okay. No worries, brother. We're good. You're good. Okay. So, now, let's go back for a moment. I want to take you back in time. But first, before we do that, I want to go back to the S&P 500. We broke out last month, March. Now we have a continuation breakout in April. Bullish stuff. Bullish stuff. The date was March the 16th of 2008. The company in question was an 85-year-old investment bank called Bear Stearns. Remember, March 16th, 2008. So let's walk down memory lane. Before that, mortgage giant Freddie Mac. This is the financial crisis. So this goes back to 2007 here. 2007, February 27, mortgage giant Freddie Mac says it will no longer buy the most risky subprime loans. They were out. April the 2nd, subprime mortgage lender New Century files for bankruptcy protection. Not a huge name, but okay, dominoes are beginning to fall. August the 6th, American Home Mortgage Investment, which specializes in adjustable rate mortgage, files for bankruptcy. Oh, God darn it. Protection. This is where it starts getting hot. Fitch Ratings cuts the credit rating of giant mortgage lender Countrywide Financial. Now, there may be some people on here that have no idea what Countrywide Financial was. Countrywide Financial, the guy's name was Angelo Mazzillo. Angelo Mazzillo founded the company and made it the largest home lending company in the world. Bigger than Citibank, bigger than JP Morgan Chase. He had this entire huge book of adjustable rate mortgages, teaser rate mortgages. And On August the 16th, Fitch cuts the rating of giant lender Countrywide to its third lowest investment grade. Fast forward. Now, this is August. Things go quiet. Nothing happens until January 11th of 2008. That's what? 4 months later? Bank of America, the biggest U.S. bank by market value, agrees to buy Countrywide Financial for about $4 billion. This was the largest home lender in the world. They were sold for $4 billion to Bank of America. January 11th, they went bankrupt. Gone. History. Actually, they didn't go bankrupt. They were bought out. They would have gone bankrupt. March the 16th, the Federal Reserve, this is pretty much when Bear Stearns, they should just say Bear Stearns went bankrupt. Bear Stearns goes bankrupt. Now, this is where we're going to pause, okay? We're going to go back in time. How did the stock market behave back then? Take a look at this. Now, remember, March the 16th, here, Bear Stearns went bankrupt. They let that company bail. They let that company fail. Countrywide Mortgage gets bought up in 2008 for $4 billion. What did the stock market do? It rallied. And what did it do? It broke out of this upper band of resistance on a monthly time frame. So please, folks, I beg of you, simply because we are breaking out right now, and it's very, very significant, but it's no more significant than it was back here. But the events that began to unfold in 2007, 2008 were ignored. Just like the San Francisco earthquake back in like 1913. It was ignored. Equities went on to new all-time highs until they crashed. Read Reminiscences of a Stock Operator. Great book, and they talk about that in that book. So let's go back to the timeline of events here a little bit. AIG, International Group, the world's largest insurer. They got bailed out. Goldman Sachs and Morgan Stanley, the last two independent investment banks, will become bank holding companies subject to greater regulation by the Federal Reserve. They got bailed out. Goldman Sachs got bailed out by not just the Federal Reserve, but by Warren Buffett. I remember this like it was yesterday. Here's where we begin to pick up steam. What month are we in? September. So all goes quiet. January, then to March. Baby steps, not just one landslide of events. July, September. Then this. This was it. You know, this is when things got really heated. Merrill Lynch got bought out. And this guy, the guy that was running Merrill at that time, he knew he needed a buyer. He didn't let anybody tell him what needed to get done. He didn't wait for the Federal Reserve to say, hey, listen, you're going to get bought out. He sought the sale, and he made a good deal. I forget his name. Lehman Brothers on September the 15th goes bankrupt. I skipped over that one. Now let's go back. So here's the breakout. The subsequent month, a failure. A failure that was not initially accepted by the market. Technicians, I'm sure, were like, whoa, major problem here. We broke out and then we broke down. Whoa, big problem. But most people aren't technicians. So we even managed to rally to attempt a breakout yet again until, of course, this month, September 2008. Here. And that's when all of these straws that have been building up for months finally broke the markets back. So what have we had so far? So far, we, on a relative basis, Relative to 2007, 2008, yeah, you want to say FTX is a part of this? Okay. We could throw that in there, but that's nothing compared to the 2008, 2007, 2008 time frame. So we've had thus far Signature Bank and Silicon Valley Bank. Does anybody believe that there are not more banks out there that have problems, and that slowly but surely over the next couple of months, they're going to get brought to the headlines, what's on front and center to the headlines? This is why I believe that you have risk. You have the yield curve beginning to, where is it? Steepen up here. And when the market does, I should say not the market, when the Federal Reserve does pivot and they do begin to cut rates, history has shown us time and time again that while they may say rate cut and equities may rally for a day, maybe 2 days, it doesn't hold. They go lower. They need more. They need more. They need more rate cuts. That's the only way to solve this problem. And remember back in 2020, when the COVID crash happened, the Federal Reserve was cutting rates every other day. It didn't work. They had to go to Congress and say, listen, you guys need to spend a ridiculous amount of money to bail out this economy. We don't have enough rocket fuel. So what did the Congress do? They said, okay, yeah, we'll do that. We know how to do that. And we live with that damage to this day. So this is the attitude that I use, and this is why I'm saying, folks, that short-term bullish, even though I have shorts on that I'm probably going to take a loss on, but we will be back. The key is to understand that if you got it wrong, take it off the table, get long, ride the wave until it breaks yet again, and then get short. So hubris is what really kills your account. So just keep your liquidity, or I call it liquidity. Some people call it dry gunpowder at the ready to short this market at will. So, and stay small in the shorts right now. All right. Let's do, what time do we got? 6:34. Let's take a look at some weekly charts. I had to reboot earlier and I lost everything. All right, so the 10-year yield, we already went over. These are all weekly charts. So we're prepping to see how the week is going to close out. One trading day left to go. A lot can happen here in one trading day. So bond yields moving up higher. I'm going to go through these quickly. Bond prices taking it on the chin. Now, they tried to break out last week. One would argue they succeeded. I would say they didn't, but rejection at a breakout point. Tips, which I own. They are now down on the week. They were up as of yesterday, now down on the week. These are Treasury inflation protected securities. So why are they down? Why did they close down today? Simple. PPI came out. Markets assumed Federal Reserve doesn't need to raise rates aggressively. Inflation's under control. All is right with the world. We're going to go to a couple of charts in a moment. That tells you not everybody agrees with that. The dollar. The dollar is just broken. I think that there's a lot of commentary out there that the dollar is going to get displaced as the world's reserve currency like tomorrow. Not going to happen. It's not going to happen. So if you're seeing YouTube thumbnails, dollar de-dollarization, yeah, that's happening. It is happening. But I'll give you a statistic. The Chinese yuan is used in global trade less than the Swiss franc. Think about that. A country's currency, China's population is what, 1.4 billion? The population of Switzerland is only just over 8 million. And their currency is more widely used for transactions globally than what is the Chinese yuan. So the displacement of the US dollar as the reserve currency ain't going to happen anytime soon. So while parking space is probably getting taken up in traders' heads out there about this and they're selling dollars, okay, I could see that happening. But don't think that the dollar is just going to crash to zero effective tomorrow. It could correct hard. It could have multi-years of drip, drip, drip of losing value, no doubt about it. And that's great for our gold trade. But right now, the path of least resistance for the dollar is to the downside. Who's benefiting? The euro moving up higher. The Japanese yen not benefiting, but it looks like it's getting ready for a breakout. So I think that this correction in the dollar is going to continue. Great for commodities, great for gold, great for silver, great for oil. What's it not great for? Inflation. If the dollar is declining and we import most of our manufactured goods, well, you need more dollars to purchase those goods. Therefore, inflation is going up higher because the dollar is declining. The dollar back here, when inflation was really running rampant and we were at higher levels on the dollar, inflation would have been a lot worse if the dollar were in this position right now of breaking down. Now, with the commodity baskets moving back up, oil moving back up, and the dollar moving lower, the pressure, the pinch on the U.S. consumer, once we begin to see a ramp up in CPI and PPI yet again, is going to be worse than back here when you had inflation going like this, not like this. Volatility, we already went over. I'm going to skip this. Dow Transports, this is our canary in the coal mine for equities, as go the transports. Generally, so goes the equity markets. No breakout here. But we do have a bull flag setup forming. I wouldn't be the least bit surprised to see a rally in the Dow Transports and a continuation move higher in overall equities. Dow Jones Industrial Average weekly view breakout. We're up 1.63%. The problem is this, and this generally doesn't end well. Price is one thing. We have great price action. Volume is another. I mean, when I look at this and I see these volume bars declining, yet I see price very, very strong. I think about the why. What's the catalyst behind the market moving up higher? Well, it's PPI. That's why it moved up higher today. So who's buying? I think that what happened today is that you had algorithms scraping the headlines and the program just kicked in and they were just buying stocks just based upon the PPI data. Simple as that. But it doesn't mean it can't continue. You're going to get the fear of missing out trade, all that nonsense that the retail trader gets sucked into. Spiders, weekly view, a breakout. Up over 1%. Volume hardly exists. Qs, very close to a breakout. Bullish key reversal bar. If you're not familiar with this terminology, bullish key reversal bar, bearish engulfing, bullish engulfing. There's a 5-part video tutorial linked below, free. Enter your email address. We hate spam too. I'll send it out to you. You get it like this, automatically in your inbox. So trip Qs, bullish, price, horrible, horrible volume. This is not JP Morgan, Goldman Sachs, Morgan Stanley moving into the markets and buying hand over fist like they were doing back here or back here. They're non-existent right now. The banks, nice little rally back here, little bear flag setup forming. Volume to the upside, very light. But to be fair, volume to the downside the week before was very light as well. Technology, bullish key reversal bar, volume anemic. Semis. This is so crazy. The semiconductor sector was down and down big last week. They're down again this week. Think about that. And we are short of NVIDIA, and that's working very, very nicely. Biotechs. Finally, have broken out here. This is LABU leveraged ETF. We own it, and we're probably going to be buying more. I may sell some puts at the 550 strike tomorrow. Where do we close? 544. Okay. Consumer staples. They're breaking out on the week, going up higher. One trading day left to go, though. Discretionary names, right at resistance. Emerging markets, strong. So we own emerging markets, not this, because this has China in it. We want anything but China. We own this, and it's doing better than the EDC. So moving up higher, very strong. Now, I want to buy more here, but I'm keeping a cash reserve because once equities go down, I want to, because if equities go down, emerging market stocks are going to go down as well. I want to take that capital and I want to move it into emerging markets because I don't think that you're going to get a V-shaped recovery on the U.S. economy the next crash. I think that money is going to float over and into Asia, emerging markets, because that's where the manufacturing growth is. They don't have the debt. We have the debt. They don't. Dollar a week. Got to go with emerging markets. No brainer. So emerging markets, love it. Energy. Weekly chart, folks. Looking monstrous. Why is the XLE going up higher? Well, look up here. XLE correlated to oil. 86% of the time they trade together. So oil breaking out. Energy stocks breaking out. Volume, though, is horrible. Oil, we already went over this. We didn't go over a weekly chart. Higher after we broke out. Oil prices looking bullish. Gasoline prices, they're down on the week, but on the month, again, this goes back to inflation. On the month, gasoline prices up 3.7%. Just this month alone. Look at this trajectory. Now you know why gold is in fuego, up 1.43%. We are long of it, happily long of it. Let's bring up our gold mining stocks. They're ripping. You know, you go to a daily chart of the GDXJ, these are the junior miners. They're going parabolic. I'm not going to be the least bit surprised to see GDXJ, NUDT, we'll go over that in a moment, all go above, RSI above 80, 85, because you have a lot of underinvestment in the mining stocks. So if gold breaks out to new multi-year highs, which I believe it's going to new all-time highs, then you're going to see the gold stocks just do a rip-your-face-off rally. Nugget, this is a leveraged ETF, putting you long of the senior miners, closing at highs not seen since May of last year. Silver, this is our leveraged ETF on silver, paying us big time. Up 7.5%. So while we're speculating to the short side, our core positions are in emerging markets, gold, silver, mining stocks. Silver mining stocks as well. Up over 5.33% on the week alone. Big breakout here. Gold money, our little spec trade on a little bank uses our gold-backed debit for debit cards for their business. And we are long of this, have been long for a long time now. And they're ripping up higher. Big move. Now, Boyle, I heard drop today. I avoided this one the other day. I have not been trading natural gas well, so I didn't trade this recently. It's down on the week. All right, let's do some chart requests. What was Netflix? I think Netflix was up like $16 today. $15. Nice move on Netflix. Okay. All right, let's do chart requests. And then we will call it a night. SQQQ. Aha. Aha. I knew you were thinking about shorting. Aha. SQQQ. LMT. Lockheed Martin. An aristocrat, huh? I looked at that chart the other day. It was looking really good. Like we're going to war. Good. The rant was worth it. I did buy puts on the Qs at the worst time. You got it. Jeff, Mr. Jeff, SMG. Okay. Tim. Snap. And Yoga Mac. We'll go over Bitcoin now, as a matter of fact. I bought more. I do dollar cost averaging on Bitcoin every week, and not a huge amount. Don't get me wrong. I'm not here to pound my chest. It's not a huge amount. Very small position of my portfolio. But how I have it worked out is that I have a certain dollar amount taken out of my bank account, and it goes straight into Bitcoin. But I take an equal amount, same amount, and I put it into the same bank, but into a money market account. And I wait and see for good opportunities to take that built up capital and put it to work in Bitcoin. And I did that on this week's breakout, and I'm glad I did. I guess I am pounding my chest. So yeah, all right. So look at me, look at me. So yeah, Bitcoin doing really, really well here. And I think it's only going to continue doing better. And I'm going to show you something. I think I may have gone over this the other night as well, but I think it's interesting stuff. So here's Bitcoin on a weekly basis. So we broke out. We were consolidating here for several weeks, and then we broke out on Monday. I just put all that capital to work into Bitcoin, and it paid off. So I think that this is going to go up higher, and for two reasons. One might say that it trades as a risk asset. Okay, I'll go with that. But does it really? It trades about 58% of the times with the S&P 500. All right. I guess you could say that. But what if we did this? It trades 87% correlated with gold. Getting the picture? In June, they're going to be rolling out Fed Now, central bank digital currency. Folks, it's coming. It's already in Australia. It's already in India. It's coming. As sure as God made green little apples, it's coming. So what you're seeing right now is a flight out of the U.S. banking system, and it's making its way into gold. It's making its way into Bitcoin, and that's why they hate Bitcoin. That's why you're seeing so much regulation come down on the Bitcoin companies. Coinbase getting sued for regulations that there are no regulations on Bitcoin, but they're getting sued by the FTC for violations. So, and many Coinbase, all these other companies, not Coinbase, another one. I forget the name of the company. I'm not into the crypto world. So it's clear that you're seeing money leave the US dollar, and it's moving its way into gold, moving its way into Bitcoin out of, and this is why you need a cold wallet, which I do not have. And I need to actually sell my crypto, move it to another exchange that you can get a cold wallet at. Because you can't, I use SoFi. Don't buy crypto through SoFi because you can't download it into a wallet. Pisses me off. So Bitcoin looking really, really good here. I like it. You want to argue it's a bit extended, okay, but money's rotating in there. So hope I answered your question, Yoga Mac. Does Tesla look like a short after today's weak bounce? We'll take a look at it. We have a position in Tesla, and a lot of it's like we have a short position, but it is naked calls on Tesla, and they're going to expire soon. I'm going to take them off the table very, very soon. People are going to jump into CBDC with no idea. They have no clue. People, they have no idea what's coming down the road. It's scary, and that's why you need to buy the physical gold, because they could seize your paper gold because it's electronic. They could seize your Bitcoin if you have it on an exchange. You got to download it to a cold wallet. So you got to have something to pay the border guards. It's very, very sad days coming here. What company provides a cold wallet? Tia. There's a company called Trezor, I believe, Trezor, something like that. I believe that's one of the top wallets. A buddy of mine is completely into crypto. He told me about it, and I go by what he says because he's it's like a religion to him. So I'm probably going to get that one. You can go online and they could sell it to you. I think that they, you know what, I can't even say what I'm about to say because it will be a problem. Is that a name of a cold wallet, TZ Burton? Yoga Mac. Ledger is the top cold wallet. Ledger. All right. I'm writing it down myself. Okay. Thank you, Yoga Mac. Thank you, TZ Burton. Thank you, sir. Okay. Let's cigarettes is currency in the third world. Yeah, it's in jail. Sure. Not that I know about that, but yeah. You know, and another thing, let's pause here for a moment. What else is currency? You could argue that the emergence of CBDCs is inflationary. Why? Anybody want to take a guess why it's inflationary? While I clean my glasses and take a sip of water? I've already gone over it tonight. Think about the charts we've gone over tonight. Why is CBDCs inflationary? What country would you go to if you're leaving the U.S.? I would never want to leave the U.S., but with my mouth and the way this country's going, I worry I may have to flee. I may have to flee because they don't like I don't have right think. Do not buy cold wallets from Amazon or third parties. Only buy from the alpha manufacturers and distributors. Why? Do they have the codes and whatnot? Because it's not finite. Interesting, but technically we're in a dollar situation where it's still not finite as well. So that's not, it's an interesting thought, but not quite the answer. Anything can be a currency. Yes. Seeds. Buy Ledger from Ledger. Yes. Gotcha, Yoga Mac. All right, so let's talk about why CBDCs are inflationary. CBDCs are inflationary because who the heck wants the US dollar if you're going to be in a digital dollar? So let's go back here. US dollar tanking. What is that? What does it cost more to buy goods that are imported into the United States with a weaker US dollar? Check. Manufacturers, when they import raw materials from all over the globe to put together their widget, that's going to cost more. That gets passed along to the consumer. You buy from Alibaba, you sell it here in the United States, it's going to cost more. Also, money is going to rotate out of digital assets and into physical assets, commodities. So, like everybody's been saying here, and you're absolutely 1,000% right. Any physical can be a store of value, assuming it doesn't expire, obviously. But this basket here is telling you money is moving into hard assets. I would watch fine art. I would watch. This is why I'm not a believer in a real estate collapse. If you have CBDCs, they're going to do what Bill Gates has been doing for years: buying farmland, buying land. I don't believe there's going to be a real estate collapse in the United States. I've never bought into that and never made a video about it. Is it going to slow? Yeah. I don't think there's going to be a collapse. But I think money is going to go into real estate, so on and so on. Used cars, meaning collectible cars. I have one, fixing it up now with expensive dollars so that when dollars get cheap, it's already fixed up. That asset's ready to go up higher. Third parties can open boxes and put. Oh, is that a fact? Yeah. Good point. Good point. Smart. Bitcoin at 30K. Ethereum had an upgrade today. ETH taking liquidity is not available. Where is liquidity flowing? Ether cracked 2,000. Bob, Dogecoin and SHIB. I don't know if I have charts of those. Let me see if. I don't even know the symbols, dude. Doge. See, one thing about TrendSpider, the owner showed me how to do it, but I forgot how to get Bitcoin relative to the US dollar. For whatever reason, this gives me crypto relative to other crypto exchanges. It's just weird to me. Yeah. They have it against the Aussie dollar versus Bitcoin. I mean, this is great information. All I wanted against is the US dollar. So I got to ask him again. It's my bad. They have it. I have access to it, but I forgot how to do it. Let's see if we can bring it up on SHIB. Told you I'm not into crypto all that much. So I apologize. I can't do it. Yes, I'm embarrassed. Bad host. Let's take a look at it versus Bitcoin. Oh, and folks, here's my neat little functionality I figured out. So there you go. All right. So that way I don't have to give the pitch. I hate giving pitches. Let's bring up. So this is SHIB versus Bitcoin, underperforming. It could see a reversal. I think there's an opportunity here. I'll share this chart out with you. In fact, let's make it one chart. It's in a downtrend channel. Relative to Bitcoin, it's not performing as well as Bitcoin, but it stopped going down. So this may be one where Bitcoin's already, nearing that overbought level. But I don't know I don't promote this stuff. I have no idea what SHIB is, and I don't want to pretend I do. Okay, I am a knucklehead when it comes down to cryptocurrencies. You're listening to a knucklehead. I know about charts though, and this is telling me that this is bottoming out. One trading day left to go. Now, let's see if I could just do this. Is Bitcoin? They don't give me versus the dollar. Why? All right. Can you spell that? Let's get this off. Can you spell that? Dogecoin. DOG. I wonder why. Dogecoin relative to Bitcoin. Do we have that? I'm trying to find the best one. All right. I don't know what OKEX is, so forgive me. Do your research here. So this is Dogecoin versus Bitcoin. I guess OKEX is the exchange. This is looking really good. Really, really good. So it's consolidating a lot more than what SHIB is doing. It has been doing so for a while. This looks like it's getting ready to break out. I got to do some research on this. Is Elon Musk serious about being bullish on this stuff, or is he really just joking about it and that's a scam? ETH. Let's see if we got ETH up here. ETH. That's the wrong one. BRL. I don't even know what the hell that is. All right. Ethereum versus Bitcoin. This is consolidating nicely as well. So these are good looking charts. So Bitcoin is already run. It's still going to run, but these look like they're shutting up pretty nicely. So they look pretty good. All right. I have a bunch of stuff to go over here, and I have a hard stop at 7. BBIO, Bridge Bio Pharma, weekly view. This is going up. Biotech's broke out today. This has a breakout so far on the week. One trading day left to go, though. It closes down tomorrow. Be careful. Daily view broke out yesterday, closed off the highs of the day, but we got to follow through today. Bullish on Bridge Bio. AMD crushed today. Still up on the week. Consolidating, but the semis we know are down on the week. Out of favor. On the day, they broke support. I'd be looking at 91.14 as support. In that range, give or take a couple of dimes. So AMD, I think, is setting up interesting. I'm just worried about why the entire semi sector is so weak. Joe for Franklin. Big breakout. Let's go to the weekly chart first. Drawings off. Boom. Big breakout. Really nice breakout. Volume could have been, well, it's a weekly chart, one trading day left to go, but still, volume could be a little bit better here, but really nice breakout. I would love to see a retest of 55.05 next week. That represents the breakout point of this week. Big gap up. I think that we could pull back here and get a retest. So I'm going to create an alert. We're good to go. SQQQ, of which I own. I own the common. I also own put contracts. And the setup that began looking really good last week, or yesterday, did not follow through today. We'll come back to this. We want to go with the weekly higher level view first. All right, so no new weekly lower low. We did put in a new weekly higher high. We have a breakout on the week. Even though we are now lower on the week. Where did we close last week? Closed at 30.21. Yeah. Daily view. Now, we're probably going to move lower here. I don't want to say it, but I got to be honest. We broke support today. This looked like a pretty good setup. Yesterday, we had broken out. That's why we put the short of the Qs on. And if we gap up tomorrow, we close out the week above the support level at around $30.50. It's game on to the upside for SQQQ. And that means bearishness for the triple Qs. LMT for Jody. We are on the precipice of a breakout here. Higher lows. I think this goes up. We're probably going to war, and they're going to do quite well. Watch for a breakout above 494.50 per share. I would be a buyer at that level. In fact, I'm going to create an alert. Bullish on LMT, SMG, Scott's Miracle Grow. I can't believe this is a standalone company. I think I say that every single time I bring the chart up. Now, interesting here is that what's happening with Scott's Miracle Grow is something that's very bullish, but we won't know if this plays out until June, end of June. And that is the this blue line here. On this weekly chart, I have overlaid quarterly resistance. So we have quarterly resistance immediately above. So doesn't mean you can't buy this. Just means that you want to put a stop loss right below you could use the VWAP here or this moving average, 9-week moving average, which is rising. But it's looking good. It's looking like it wants to break out. It's putting in higher lows, good stuff. Daily view. I think this is going up. I really like this setup. I think it's bull flagging out, holding support. Here's that quarterly support again, and we're finding support at it. I'm liking it. So plenty of bidders below. Snap, not a big fan of this company. Weekly chart, it's flirting with a breakout. We're not there yet. I would not be a buyer until we do break out. Daily view. Rejection today at resistance. Right up here. These are the automated trend lines, folks. This is the AI doing the work for you. Click of a button, take it off, put it back on, 35% discount code below. I don't know how people don't use this all the time. So I'm not loving it. I need to see a weekly breakout. Tesla, is it a short? Let's get rid of all these. Well, maybe, you know what, we'll keep them on for a moment. All right, so these lines have a purpose, okay? I know it's noisy, so bear with it. Each one of these lines in red represents, these are actually my drawings, not the AI. And I draw pretty good resistance lines and support lines. So you can see that we have a bunch of resistance levels above. Now, I mentioned earlier that I have naked calls above up here, though. So I'm pretty confident that those will expire worthless. But can this move up? Would I short this right now? No, I would not. I would not. Not until we saw a failure, a close down below 185.61. Right now, it's showing that it probably wants to move up. It's bottoming out here. You're seeing sell-offs get bid. You don't want to buy that environment, right? You want to see new lower lows met with rising down volume. You don't have that here. They try to take it down. What do? They bid it back up. They try to take it down. They bid it back up. They try to take it down. They bid it back up. You don't want to short that. Think about having a level 2 in front of you and you have all the bids coming through, right? So you have a ton of offers and all of a sudden the bids go ripping up like this. Right? It's not to be shorted right now, not the common stock. So I would not make that trade. And I think that's it. Guns and ammo, good investment. No doubt about it. Yeah, folks, please like, subscribe, please. Helps me out with the YouTube algo. During the live, Musk, I saw that, and that's what always was in the back of my head, that he thought it was a scam. I didn't know if he was joking or not. Franklin, have a great night, my friend. Tim, have a great night. Talon, thank you, sir. Smash the like button, please. Follow the channel. Jody, you are very welcome. And we saw that one. Dan, thank you. Folks, everybody have an awesome night. Thank you for being here. Have a profitable trading day and a great weekend.